as artificial intelligence adoption moves closer to 2026. The focus across markets is gradually shifting away from experimentation and toward practical, revenue-generating deployment, and within that transition, certain smaller companies remain under-examined despite having real-world exposure to AI-driven demand. One such company is SoundHound AI, trading under the ticker SON, a small-cap firm that develops voice and conversational AI software embedded directly into products and services rather than operating at the infrastructure or model training level. SoundHound's technology is used across automotive infotainment systems, quick-service restaurants, IoT devices, and enterprise customer support environments, where voice interaction offers efficiency advantages over traditional interfaces, according to publicly available earnings reports and regulatory filings. The company has demonstrated consistent year-over-year revenue growth, supported by expanding customer deployments and a growing contract backlog, although it remains unprofitable, which is not unusual for early-stage AI software companies prioritizing scale and platform adoption. From a balance sheet perspective, SoundHound holds cash but has historically relied on external capital, creating ongoing dilution risk that investors should weigh carefully. The broader AI growth thesis for the company is tied to the increasing normalization of voice-based interfaces in vehicles, restaurants, and enterprise workflows, particularly in settings where hands-free or screen-free interaction improves usability. And SoundHound's embedded software model may offer switching cost advantages once integrated, provided performance and reliability remain competitive. That said, the risks are substantial and should not be minimized. The company faces indirect competition from much larger technology firms with deeper resources. Its revenue trajectory depends on customer rollout timelines that can be delayed. Valuation remains sensitive to sentiment despite the sub-$15 share price. And macroeconomic or regulatory developments could affect enterprise and automotive spending. In the short term, stocks in this category are likely to experience heightened volatility driven by earnings results, capital markets conditions, and broader AI sentiment, while over the long term outcomes depend heavily on execution quality, customer retention, and the actual pace of AI adoption rather than narrative momentum. This video is for educational purposes only. This is not financial advice, and viewers should conduct their own research or consult a licensed financial professional before making any investment decisions. In summary, SoundHound AI represents a legitimate revenue-generating participant in the applied AI ecosystem with potential structural tailwinds. But it also carries meaningful execution, competitive, and financial risks, making it a company that may be worth understanding deeply rather than approaching with assumptions or expectations.